Hey everybody, welcome to Ankerstar Wealth Morning Show. We have three topics for you today, but the most exciting part about that is we are switching roles. I finally get to be the good cop. Mike gets to be the bad guy. I'm going to go ahead and go first with the good news, which is TOST is one of our ego stocks, exponential growth opportunity. Again, no guarantees. But TOST, it's a restaurant stock where you order online. Maybe you've used it, not even known that you were using it. But it was kind of born out of COVID. It's a great idea, and it's coming along. I will talk about their earnings and how the stock has performed out of that and what I anticipate in the future. Then I will switch it over to Mike, who tells not so good of a story from Disney, who released earnings and, of course, guidance and everything else that goes along with it. The stock's not doing so hot. He can peel that back for us. And then finally, something we talk about fairly often because, Mike and I are in our 50s, but most of our listeners are probably in the same genre. I don't know. But if you're not collecting Social Security yet, yeah, that's a big topic of concern is it going to be there? How much is going to be there? Is there going to be reform? Well, the Wall Street Journal ran an article, which Mike is going to bring up and then synthesize for you on with his thoughts. But before we get started, this is a financial education presentation. You have to do your own due diligence before acting on anything here in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions expressed are Mike and mine alone. Let's start with TOST. I used TOST. There's the chart. I used TOST Monday night. Went and see The Fall Guy, right? Family's all home. They wanted to go see a movie. I'm like, sure, let's go. Went to see The Fall Guy. Fall Guy was actually pretty good, especially if you had seen the original series back in the day. I didn't follow it religiously. But yeah, I mean, it's cute enough, right? Nice. It's PG-13, so family friendly enough, right, to be able to take kids to. But yeah, we go into what ours is called a Flix Brew House. And again, they use TOST technology, which is, if you know, QR code sitting on the tables, that's not new, where, you scan it to get the menu on your phone. That is not TOST. That was just what we started doing coming out of COVID to save paper and not touch things and stuff. TOST took it to the next level. And again, is now you can place your order right here within your phone. You get it exactly right. It goes directly to the kitchen. There's no more staring at a waiter or waitress that when you're like, I'll take the BLT, but hold this and do this and this on the side. And they're just looking at you with a 1,000-mile stare saying, okay. You're like, not the most confidence building thing, but you put it right in there. So if it's messed up, well, it was at least messed up directly from you. You either entered it wrong or they messed it up from directly reading it wrong. And you can close out your tab right there. No more bill right at the table, right? Just close it out on your phone or order something later to go right there on your phone. So it saves restaurants a lot of manpower because now restaurants can simply have somebody that comes in and checks on people versus having to take orders, go back, fill order, all that stuff, right? So overall, we're really hot on the stock, but how did the earnings go? There was an article on Yahoo Finance. I'll just talk to it. They did beat on revenue. So you think earnings, revenue, top line, earnings, bottom line, and then forecast. Well, their earnings beat, revenue beat, which is top line. Earnings just missed, but that's okay. It jumped up on a slightly wider loss than expected. But it's that forecast. And I showed this, I believe, yesterday or day or two with another stock. But when you look at the chart, like one day, okay, that doesn't tell us anything. Let's go to the 1 year. So yeah, stock obviously is big on the day. But what do I look for? Well, you go into these earnings and then you go here to the forward. Yesterday, we had some 2025 projections. These aren't quite out there, but here we are getting the Q1 projection. But look at, Q2, how they expect Q2, which will report in quick math tells me mid-August, early August. They're getting a lot closer to profitability. So the rest of the year, they're really shoring things to get profitable versus this is growth phase right over here, right? So, and that's when you want to be in the stock. You have to, Peter Lynch said, you have to anticipate the anticipations of others. So you can't just wait until the stock's doing awesome and then hop in because you will have missed all the upside. So that's why we're in it now. We think it's just going to get better over time and couldn't be more excited about it. And, true peers out there, I don't really know of one. Maybe there's some other baby firms that are trying to do this too. But, when I look at the terminal every time and it says TOST on it, it's like, yes, another score for us. All right. So I will stop sharing. Mike, why don't I turn it over to you at this time for what is going on with the mouse?
Yes. I'm sure people are still in shock, Steve, that you announced that we're both in our 50s. So they're like, oh my gosh, Those guys are in their
Yeah, they
50s.
probably hijacked the whole show. They can't believe that.
But Disney, so the latest on Disney, and I remember just a couple years ago when Disney came out with their streaming platform and their stock shot up. My kids were excited to watch Star Wars and Marvel movies and all that. I've done some experimentation shutting down these streaming services, of which I subscribe to so many of them, and trying to figure out which ones the kids cry about the most, which ones are the most valuable. Disney continues to be one that they still talk about, but we do not have anymore. So how does this reflect into our stock? So Disney came out with earnings just a couple days ago. Stock bid it yesterday, down 10%. So I'll hit some of the major news. They said their traditional television declined by 8%, 2.77 billion. Operating profit fell 22%. Major things. They're trying to compete with Netflix. And what this reminds me of is yesterday when we talked about commodities. So these streaming services, there's so many of them coming out. Are they becoming a commodity? Are they competing on price? You can only watch so many shows in a day. So I believe they're going to start to see more and more of that churn that Netflix has dealt with over the years. I found this chart kind of interesting that you're seeing on the screen, but this is the profit from their streaming unit. And you can see it's all below zero. The good news is the loss is narrowing. And I keep thinking to myself, how can they be losing this much money? I mean, obviously you have to pay for content, but and Steve showed on the TOST chart, like Disney streaming unit is almost into profitability. I mean, that's a lot of losses over the last 5 years. So let's take a look at the stock. So here is a 5-day chart of the stock. So you can see the big drop yesterday. It's, today is break even, but down 10% yesterday. But let's just not look at 5 days. Let's see what it's done for a year. And you can see for a year, Disney's all right, but let's even back out to 5 years. That's a 5-year chart. If you got into Disney 5 years ago, you're down about 15% in 5 years. So when you compare that to our overall market, Disney has not done well. So, Disney is not one that we hold in our model as far as a standard investment. I do know people, 20 years ago that said, hey, buy Disney and hold it forever. Here, I'll look at the full graph. It looks similar to Apple at first. When we looked at Apple before going up, maybe up through 2021, you like that parabolic look. But the last, I don't know, 10 years, blah. So anyways, the reasons why you don't just always put into a stock and hold it forever, things can change. So, Disney still a good company. I like them as a company, but as far as an investment, not looking good and getting more into that commodity space in the streaming services, which they have to try. So on to more bad news. And Steve talked about it. So Wall Street Journal, hey, I have a newspaper right away. Now I am over 50 because I'm the last of the people that subscribe to newspapers. So let's look at the Wall Street Journal article. I brought up the electronic copy for everybody. I'm gonna scroll up here. So this chart, and I froze this video. No, actually I didn't freeze it. I had it froze. Let me go back here. I'm gonna freeze this again. Okay, so what this chart here shows, and it looks like kind of like I don't even know what it looks like. It looks like a person there, but that orange part, that is the baby boomer population retiring. And you can see the population kind of surges out. We know that there's a lot more baby boomers. And if you look at those two arrows that point inward, that is the working population as born, 2014 through now. So the last 10 years. So what you can see is more population is retiring and collecting on benefits than are being born in the United States, declining birth rates. You hear this across even like China, Japan, Australia, declining birth rates. And this can be very hard for a government collecting revenue that pays out Social Security to manage. So this is part of the reason why we hear we're going to have this Social Security crunch going forward. So I'm going to scroll down, show you just another chart. So right here, this chart shows you the income is the blue line and the benefits paid out to Social Security is the orange line. So, you can see many years in a row, the blue line was higher. Therefore, the government was bringing in more money from Social Security than it was paying out. And ideally, and I thought about doing this calculation of my own Social Security benefits, because you can pull your Social Security statement and see everything that you've ever contributed. And that's what you've contributed, but you could double it, and that's what your company's contributed as well, because there's two sides to it. If you took that money and you invested it, that's why I didn't want to look at the calculation, how much you would have. It would be a lot. But, and I honestly, if the government had done that, oh boy, that would be a great program. It would almost be like forced savings. However, that isn't what they did. They took the money in, they paid out the benefits. There was a surplus. They used that surplus to do other things with, other investments. They do issue, they issued it as bonds where people would take some cash and pay interest in, so the government would make some return on the money. But you can see that this year, 2024, 2025, next year, the benefits start to exceed the income. So therefore, now we're starting to take money out. But look at the government does have a big old chunk of money right there. So this is the trust fund. So that money kind of has built up, but then you can see in 2025, it's going to start declining. And then this is what leads to that crunch that you hear about people talking in 2035, Social Security is going to run out of money. So you've heard that, and it's a political football that they just keep kicking down the road, because nobody, as Steve said before, nobody wants to deal with this. No one wants to deal with a problem 10 years from now, because everyone has a short-term focus. So what does this mean? Does that mean you're going to get no Social Security? That's absolutely not the situation. The belief would be that it could be a reduced benefits, and I've seen as much as 17% reduced. Now that's unfortunate, because if you're counting on, let's just say, $2,000 a month and it's cut by 300, that's like, oh, I thought I was going to get more. And my financial planner that I worked with, that's what they thought we were going to get. And that's what I was planning on. And that's what Social Security has to deal with over the next 10 years. Now, as far as possible solutions, we hear things increasing the retirement age. They've already bumped it up to 67 for full retirement. Another thing is to remove the caps. Right now, you only pay so much Social Security, and then it's capped. They could remove the caps, and you could pay in more if you make more than, let's say, at least a couple $100,000 a year. There's some other solutions. The government could borrow more money to pay the benefits. And I hate to say it, that's probably the likely short-term solution. Borrow more. We only owe $34 trillion. What's another trillion on top? You get numb to it, and that seems like a short-term thing. So is Social Security overhaul necessary? That's kind of the question. Yes, it absolutely is necessary. It's just, when are they going to do it? I don't expect we're going to hear this in the debates coming up for this year's political football season. Probably be kicked down to the next time. But anyways, this is kind of the bad news side of it. I will say that there's another part that I'm not going to go into today, which is the Medicare, Medicaid side, which is, Social Security is just dollars in, dollars out. Medical costs going up with retiree benefits, that's increasing exponentially. So that also is out there. So those are the downside. I would expect at some point this is going to come up politically, but I'm guessing not this year. That's all
Yeah,
I've got, Steve.
Yeah, no, that's perfect, Mike. Thanks. If you could scroll up just a little bit, show that a full blue chart there. Just a couple points, three things is you're going to hear trust fund, and I think immediately is trust me, there ain't going to be no money left, which is what this is saying. And you know, governments are terrible at investing. George Bush one came, or excuse me, George Bush Jr. Pushed hard for the for you to opt out and go into your own IRA with this money. And we're like, no, people are stupid. It's like, oh, okay, people are stupid, but yet the government, okay, yeah, like, okay, please tell me about stupid investing, professional investors. It's like, why don't you go invest like you do your own accounts? The all millionaires up in Congress, right? So anyhow, so they're notoriously bad. As far as borrowing to pay out the benefits, I think that's illegal. However, they do make the laws so they could make it unillegal, which is probably not a word, but make it legal, at least in the short term. Or last, what Mike, what do you think I'm going to throw out there as the fading shot? We just talked about it, I think Monday or maybe as late last week. Put
I'm
a
not sure.
couple of $1 trillion coins, print
Oh
them out,
yeah.
put a coin in there. You just doubled what you got, problem solved. And yeah, and then sit back and wait for what other problems that explode in the world. There you go. There's your actual Bitcoin, brought to you by Mike Youngman. So, all right, everybody, thanks for listening. Don't get too down on this, but we do like to, you know, we bring to both the good and bad. But this is something that's out there, so we have to factor it in. You know, just because we think it's dumb and we would want to change it ourselves, we owe it to you to factor in that, yeah, you may not be getting as much as you think. So as your wealth managers out there. All right, with that, we'll leave you and talk to you next time. Have a good one. Bye.